one of the lessons that I believe government's going to learn over these next 5 to 10 years is that the private sector is better at managing real estate than the public sector. And it's fundamentally structural
Hmm.
because imagine if you're running the FDA and Congress decides to cut your budget and you have to think about cutting costs within your agency.
Hmm.
Are you going to cut the program of the emerging drug, or are you not going to fix your roof? You're not going to fix your roof. And so the idea of them outsourcing the facilities management to us is a terrific idea. It happened in private sector business 20, 25 years ago. You saw these large corporations owned their building and they did sale leasebacks and fundamentally, took themselves out of that business to focus on their core operations. And I think government's going to be evolving into that space now.
Hi, this is Matt Slepin, and welcome to Leading Voices in Real Estate. Today's episode, recorded on May 28th, is with Darrell Crate, the CEO of Easterly Government Properties, a REIT focused on acquiring, developing, and managing Class A, mission-critical properties leased to U.S. government agencies. You'd think that the headline is D.C. area and government offices, but they actually have little traditional office, and only 7 of their 100-plus properties are in the DMV. It's interesting. Most of our guests are from well-known and established companies telling their stories. But I'm thinking of 3 podcasts in the last year or so with guests from not well-known companies, each of whom, like Darrell, came to the podcast to actually pitch their thesis. I'm thinking of the interview with Griseda Partners last year that presented their case for investing in secondary and tertiary markets in the western states. A thesis that I find fascinating, so much so that I actually joined their advisory board. Thinking of our conversation in Santiago, Chile with Francisco Rencaret from Territoria, who presented the case for investment in commercial real estate in Santiago. And then there's this conversation with Darrell, discussing the mismatch of pricing of his company somewhere in between the office REITs, which we all know are challenged, and the net lease REITs, which are doing quite well, and Easterly's discount to both sectors, hence pricing mismatch and an arbitrage opportunity if they're more realistically valued against either of those peer sets. Each of these guests came to the interview with a case to make, which I'm happy for Leading Voices to air. Interesting dynamics to think about the different arcs of conversations that we have on the show. And with Darrell, it provided me with a step back and additional perspective on what feels like actual stability of the backbone of our government, when the headlines and my emotions on the news reads uncertainty and instability around the government, which I'm sure is part of Easterly's market challenge. Of course, Darrell worked for Mitt Romney and brings that through line into his work and mission, which he described as, "Our business is the government improvement business through outsourcing of the real estate function," something we've also seen with outsourcing the real estate function throughout the private sector as well. That kind of outsourcing is just what we do as consultants on the human capital side at ZRG. Through executive search, interim, and embedded recruiting, as well as our consulting services, we bring specialized expertise to businesses in all sectors of the economy, including, of course, the real estate sector, in which we have particularly deep domain expertise. So if we could be helpful on the human capital side in your real estate enterprise, including your thinking and strategy around the competitiveness of your operating platform, one of my favorite topics, we'd love to talk. Feel free to reach out to me at mslepin@zrgpartners.com. If you're enjoying the podcast, please check us out also on YouTube and share episodes with your friends and colleagues. The archive is available for free on your podcast app or on the ZRG website. Just Google ZRG Leading Voices. I hope that you enjoy this conversation with Darrell Crate. Darrell Crate, welcome to Leading Voices in Real Estate. We're both in D.C., although we're separated by a couple of miles right now. So I'm at my Airbnb with cherry blossoms behind me. You're in your office. And I used to work downtown in D.C. for years. I was here for the first 20 years of my career. I kind of ended it working in a government office building. I worked for the Resolution Trust Corporation. I will
Wow.
hold my nose when I describe the office building, how it was maintained, and what it felt like in a temporary agency. There were always boxes on the hallways, and it was there. So I don't want to start this with a negative perception, but that's one of the questions that we'll talk about is kind of what does it look like having all of your properties? What's it like having the government as a tenant? How much work do you have to do as triple net lease, but how do you maintain that stuff? And so lots of questions, and also the government is changing a lot and maybe in your favor for more opportunities for government to outsource real estate space. So lots to talk about, and maybe start with Darrell. You're introducing yourself and the overview of the company very briefly, and then we'll get into all kinds of stuff.
Sure. Well, Matt, I'm so glad that you were a tenant at one of these government buildings because you will deeply understand, all the value that we can add to the government. We started Easterly Government Properties, back in the sort of 2010 to through 2012 time period as a private equity fund. I had an experience 10 years in investment banking, on 10 years as an asset manager, and about 10 years working with Mitt Romney on his political career. And so working with Mitt, I got a vast exposure to government, how it works, and it became very clear that there were certain agencies in the U.S. government that are politically, in a whole set of ways, exempt. Everybody believes there should be safety. People believe that we should have drug enforcement. People believe we should be taking care of our veterans. And so those agencies we'd call mission critical to government. And it doesn't mean if Democrats or Republicans are controlling the budget, those agencies are going to be funded. And what's most important is that they're executing their mission. So in our mind, as you approach real estate, you look at those buildings that they're occupying. They're specialized facilities. The FBI's, have an armory. They have something called skiff space, which is special conference rooms that you can go into. They have no windows. Listening devices, cannot penetrate them, and they're very safe places. And those rooms are expensive to build. And other features like that, we have safes in our DEA labs that hold confiscated drugs. And then the Veterans Administration, which is the largest healthcare system in the United States, they have a different kind of layout in their healthcare facilities. So you take all that and we call that features. And the government is investing in those spaces. And so they're helping us actually fight obsolescence, which is one of the risks that you're always trying to manage in real estate. And so we ended up buying these buildings, and the whole concept was buy the real estate, sell the credit. The U.S.
Mm,
government is the safest tenant credit in the world. And so the opportunity to buy these mission critical facilities, put them into private equity funds worked quite well. In fact, it worked so well that we were educating competitors faster than investors. So we ended up taking the company public in 2015. It's on the New York Stock Exchange. They wouldn't give us the ticker FBI, so we took the ticker DEA, even though our name is Easterly Government Properties. And you too, Matt, can be my boss, buy some shares, get a nice 8% dividend, and the company's on a great path for growth.
wow. And what's the lots and lots and lots to discuss about this. So,
Sure.
what is the size and scale of the company today? Just give an overview
Sure.
and the breadth and where these
Yep.
assets are.
Yep.
And is it all U.S. government, federal government, any states? So kind of
Great.
go
Yeah.
through the
So we
overview.
have about 10 million square feet of real estate across the United States. We have no federal buildings in Washington, D.C. And, folks like you and me who are in the district, always query why. But, the work that's getting done in D.C. either tends to be legislative or bureaucratic. And we would call that plain office.
Mm,
You see it on K Street and so many other streets in Washington, which is just rows of office buildings where people are doing bureaucracy work. What we do is buy facilities that are out in the field, close to the population, places where folks are meeting mission. And so 90% of our portfolio today, is all federal government, full faith and credit of the U.S. government. And the remaining portion of the portfolio is either high credit defense contractors, what we would call government adjacent. These
hmm
are buildings that have skiff space or have the other types of features that we see in our government building, but they're actually just working in collaboration with the government under a government contract. And then likewise, municipalities and states. There's some very high credit states that are out there that would exclude folks like Illinois, not to pick on them too much. But there are fine states out there that we can also take that very high credit real estate and focus on their mission critical facilities as well.
Right. And the mission critical facilities, therefore, are not office buildings. And one of our topics for today is you are a triple net lease REIT, really.
Yes.
I thought you're an office REIT also, and there's an office REIT contagion right now. We're going to talk about that, but you
Yep.
don't have much office where you say those
No,
bureaucrats work.
I mean, obviously there's offices in an FBI building,
Of course.
but many of these features, are an important component and are really the core of what's going on in the facility. If you were to look at the world of real estate, we are classified as an office REIT.
Mm,
Because, well, by default, because in a set of ways we're not retail, right?
right.
We're not a multifamily development, and we do house a workforce. So they put us in office. I wish they didn't, and in a set of ways, that's why our business is unique. We don't have any other competitors, and we're unique in the industry.
I want to use the word, how does the REIT world digest this? I'm thinking the word digest for some reason,
Yeah.
because it has to fit into a box, and the REIT world has changed. And now there's lots of winners and losers as against NAV in the REIT world.
Yep.
And the investors have changed in who plays and therefore how they look at it and underwrite these things. So they don't drill down as much as we are today as they think about where they're allocating capital
I
within their REIT
I I
allocation.
I think that's so important to understand, particularly for, folks who may be CEOs of real estate businesses that are aspiring to be public, or, for folks who are thinking about a real estate career.
Mhm.
We have been in a real estate depression, for the last 24 to 36 months in almost every sector. It hasn't felt like a depression because you haven't seen the distress, the bankruptcy, all those things that happened when you were at the RTC. But what you do see is banks have really restrained the capital that they're willing to put forward to developers.
Mhm.
So this liquidity crunch combined with the 10-year treasury moving up, so people are not getting cap rate compression. So just by owning your building, it's not growing because money, government money just generally is becoming cheaper, and those used to be some big tailwinds. So there have been no tailwinds in real estate most recently. Things have been stuck, and so this really is a time to start thinking about leaning in real estate, conservatively positioning yourself, because we have a nice decade of real estate investing ahead of us.
Let's stick with the theme for a second because I agree with you. I'm obviously a real estate advocate for a whole bunch of reasons. But if I think about PE versus REITs, and
Yep.
the last cycle, even though we're in a depression for PE as well, PE is raising a ton of dough
Yes, they
and the
are.
REITs are less so. So people are waiting for this vintage, which is going to be gorgeous,
Yes.
to be where are they going to invest in this vintage? And they've been saying it's going to be in PE and they have all their dry powder. So how do you sell
Well,
generally REITs and then you specifically?
it's great not to do too deep a dive on PE versus public. But
Hmm.
one of the things you're seeing most broadly in the asset management industry is folks who've been investing in private equity real estate or private equity broadly
Hmm.
don't have the liquidity that they imagine.
Hmm.
When you invest in a private equity fund, you can imagine that you're going to begin to get your money back in 5, 7, or 10 years. In many cases, that's been, for all the liquidity concerns that I was referencing earlier, that's taking 24 to 36 months more. And particularly for individual investors or small foundations and endowments, those liquidity squeezes can really cause a problem. So when you look at a REIT, the great opportunity is that you can enter into the space today, and then you basically have liquidity, 5 days a week. What that also leads to is larger speculative bubbles that allow entry and exit. When you own a private equity fund, you get a statement at the end of the month and they tell you what your real estate is worth. But the reality is what they're putting in that statement really may be an appraisal that could be 12, 24, even 36 months old, and they're
Right.
making some assumptions. And so what you see is you see a real price for a REIT every day where you can
Mhm.
enter. Um, we're trading at a discount to NAV. NAV is a little bit of a theoretical number, and I'm not sure who actually has the crystal ball that gets to establish it. But what we do know is that in the norm, we're trading at a 20 to 30% discount. If I were to come to you and say, I'll sell you $1 for 70 cents, You should see that as an attractive opportunity. But for whatever reason, it is an opportunity because the REIT market, for all the reasons you're saying, which is there's a lot of box checking that folks are thinking about,
Hmm.
it leads to these opportunities for entry. So when you're thinking about investing in real estate, having a portion in this public market where you have this ability to get liquidity and buy assets at a discount to their long-term value can really position yourself very well as part of your broader real estate strategy.
Totally agree with that. Let's see that happen because
Sure.
people then, right, because it can be more volatile based upon how the world feels at the moment. And
Yeah.
then they want to jump into something else. And that hurts that concept of
Yeah.
discipline. But let's go into the thought of your discount NAV and let's use that
Yeah.
as the yardstick to think about this stuff.
Yeah. Y-
Let's think about different types of, let me just add a few questions, different types of REITs. So small REITs discount versus some larger REITs
Yeah.
discount for the office sector, which you're not of, but you're part of, kind of maybe, or you're
Yeah.
associated with, and then the discount, which is much lower on the triple net lease REITs. So think about all those together.
Yeah, no, so if we just, take a look at those three, the largest REITs that are out there, again, have the most diversification. When you're thinking about real estate broadly, one
Hmm.
of the number one ways that you de-risk a real estate portfolio is diversification. It's what you can do. You never know when some tenant is going to go bad, some piece of dirt is going to have a problem, or if the location of your building, is going to quickly come out of favor. So the largest REITs have diversification, and accordingly, they trade at less of a discount. There are smaller, specialized REITs, where again that lack of diversification can cause a problem. And quickly, investors will sometimes call that like a REIT salad. These small REITs are trying to grow, and they become a little of this and a little of that, and that really doesn't allow you to have a pure play investment in them. So they'll trade at a discount. Then there's this area, called basically net lease, which is spread investing. The idea of I come to you, Matt, and say, give me a cost of capital of 7%, and I can go borrow, at 5%. Well, my cost of equity is 6% if I have a 50-50 capital mix. And then if I go buy a building that's at a 7 cap or 8 cap or 9 cap, that's very accretive.
Hmm.
And and those entities always need to be growing because that acquisition, the way to think about investing in those is the acquisition machine big enough to keep feeding the beast? And
Hmm.
is the residual value of the buildings that they have substantial enough where what's falling off the back of the truck as the new stuff gets loaded either the value has been harvested or the cumulative amount that's deteriorating is less than what's coming in the front end. And
And
so that's
when you
spread
use,
investing.
let
Yeah.
me play with that for a minute, because as you use you as an example, you probably have a higher renewal rate than the average triple net lease REIT that has a Walmart or not,
Yeah. A
yeah,
Jack in the Box, Target,
Walgreens is what I
whatever
meant
it
to
might
say.
be.
Right. Yeah,
Yes.
that's right. So
Uh-huh.
they're
Yep.
going to trade out, but maybe you don't trade out because the government in these specialized facilities, they got to be pretty sticky.
Yeah, you're exactly right. And sometimes I'm fond of saying that we're actually a triple net lease company with like a scoop of office in it because, with the way you characterize office is that folks are adding value to the building. They're putting amenities in, they're doing things that are essentially fighting obsolescence.
Hmm.
And a good office REIT, a good office investor is always using the least capex to fight obsolescence the most. That obsolescence fighting efficiency is what you always need to look for. But for us, you're exactly right. We have these very long dated buildings. Buildings last 40, 50 years in the government. Think about it this way. If you kind of squint at a government building that was built in the 1970s, it's
Hmm.
kind of looking old. You
Hmm.
look at the 80s, it still looks like a government building. And, so that really tells you, what the life is. In our portfolio, the average life of our buildings is about 16 years.
Hmm.
The other beautiful thing we have as a real estate stat is that our weighted average, lease term is about 10 years, just 9.5 years. And, as we look forward, that maintains, the residual value. And as we continue to grow, we've got a very long, life of cash flow flows, in this business. And so you're exactly right. We need to be differentiating ourselves and explaining to folks that we have these net lease characteristics. The firm, I became the CEO just 2 years ago, although I was involved in the founding of the firm. During COVID, the company had decided to not grow. And when you in a net lease kind of business, if you're not growing, this is what causes a fundamental problem. So we ultimately, changed the management of the business. We put ourselves on a growth path where we've been growing 2 to 3%. We have 8 quarters of that growth that's been posted. If you look at our earnings estimate for the coming year, we're going to also post somewhere in that 2 to 3% growth, which is very healthy relative to a net lease. And when you look at the quality of our credit, which is what you're pointing to, we have full faith and credit of the U.S. government, so our money gets paid on time, and the lease renewals are 98, 97. If we had 96% renewal rate, we'd feel bad about ourselves. So, these are the types of all layers of safety net that put under this investment. And today, there's an opportunity to buy it, I think, at a very attractive price, because all of what you're identifying is not really priced in. You're getting an 8% dividend on this stock.
Mhm.
The U.S. Treasuries are a little over 4, and I can tell you there's not 400 basis points of risk between when the money comes in the door, and when we send it out in a dividend payment. And then you've got the growth on top of that.
Yeah.
Yeah. Obviously, I'm very enthusiastic about what we're doing. So,
So, okay, so bunch of questions on the things that you said. I have to remember all the things that I want to drive into here. But one of them is you just said you just during COVID you decided not to grow. I've
yeah.
never heard anyone say decided as a strategy not to
Well,
grow.
well, it's interesting, because our business is so secure and stable with the U.S. government. In
Uh-huh.
a set of ways, the management at the time decided to manage the portfolio more like a family office than a public real estate REIT.
Mm,
What does that mean? That means if you are a family office, if you have lots of wealth, think of it this way. If it's raining outside, you just don't go outside until it stops raining.
mhm,
In the public markets, you have quarterly earnings to report. You need to continue to show investors your accomplishments, and all of those things just require constant growth. So if it's raining, snowing, sleeting, you got to step outside, do the work, come back in,
mhm,
and it was not an imprudent decision for the portfolio. And if you look at our portfolio performance over from the beginning of the company over almost 15 years ago, the performance of the portfolio is excellent. But what we stopped doing is feeding the public company beast, and we
okay.
stopped growing those cash flows. And in the public markets, when cash flows deteriorate a little bit, investors get scared, they step away, and the stock can come out of favor. And
Mhm,
so we spent the last 2 years repositioning the cash flows of the company so that they compare very favorably to other firms. We cut our dividend so that our payout ratio, the amount of money that we pay out to investors every quarter relative to what we take in, is very low. So not only do we have double A plus money coming in the top, we had a very high payout ratio because we knew the security of the money coming in. However, when investors, and you made the point, investors look at this and almost desktop underwrite, when they're deciding on stocks, and they go, "Ooh, it has a high payout ratio. There must be a problem." And so accordingly, we cut that ratio down so it's about 2/3 gets paid out. And we've made every statistic, as you look at the company,
uh-huh.
be very favorable relative, to the industry broadly.
And
And that again positions it attractively. So if you're desktop underwriting and learning a little bit about stocks, it's going to be a pure attractive.
yeah, and if the investors walk away, hit your stock price, then your debt to equity ratio changes, and then you go off bounds of under 40% or whatever the metric is at this moment, and then that becomes trouble. So trouble becomes trouble
That's right.
until you go save it and turn it around. But then turnaround, then you have to get popular approval of your turnaround that that's coming together.
That lag effect in real estate is really important, and savvy investors, are looking for, both of those trends. And
Hmm.
if you're wise to, precisely what you're saying, you
Hmm.
really can get ahead of either avoiding losses in cases where things are deteriorating, or getting in early.
Hmm.
Rarely in so many industries like finance or tech, it's very hard to get in early because the optimism about the future is so high. But in real estate, it's the show me state of business investing, and we're 8 quarters into a terrific track record, and we're starting to see it get traction. But these things can take 2 or 3 years.
I bet. And then what is the NAV differential between you and the other triple net lease REITs? We'll come
Yeah,
to office in a
great.
minute,
Yep.
but because then you can have immediate pop to get to that place, and their NAV discount is as low as it gets, except for
Yeah.
data centers,
Yep.
um,
That's right.
in the REIT world, I think.
Yep. No, you're exactly right. Net lease, because net lease is an enduring business. As long as you're consistently growing year in and year out, there's a terrific opportunity. And that's what makes the machine work. You don't need to evaluate, is the building becoming obsolete, not obsolete. They have basically a spread investing machine. And so, that's where we find ourselves, in a place where relative to, office NAV, we're in the pack or a little bit lower, but relative to net lease, maybe just to talk about multiples. If we look at us relative to office, we're still a multiple to 1 to 2 multiple turns below being at the median. We're
Hmm.
higher credit quality. We have more consistent growth than office, but we find ourselves trading at a multiple discount to office. So that would be $5 or $6 of appreciation if we just got to the median. And then your point is exactly right. Net lease trades at even a premium to that. So the idea, they trade at multiples that are
Hmm.
almost double, where our multiple is today. So if we were a strong net lease stock today, we're trading, 22, $23. That would be a $40 stock. That's
Hmm.
not going to happen immediately, but somewhere between office and between net lease, is ultimately the right. If we can continue to consistently perform, that's what you can expect. And as you think about folks who have real estate careers or thinking about investing, you are waiting for reversion to the mean so often when you're investing in real estate, and that's a really important point.
Yeah, reversion to the mean, I love it because things do get to where average was, except when there's a fundamental change, and the
Yes,
office world has had a fundamental change. It will not revert to the mean.
that's
We will
correct.
have office in the future, but the not high quality stuff is going to be problematic.
I think that's right. And also as you think about office, one way to consider is that uncertainty about what an office is that most satisfies the needs of clients is where the confusion lies. And then the
Hmm.
question becomes, how much capital is it going to take for an owner of the building to transform that building into being the A quality product that their customers are going to demand?
Hmm.
And what that'll also cause is, like, C-class buildings, it's almost impossible for them to catch up, because if office shifts to some sort of very different form, and the imagination of AI and the transformation of work from home has people imagining things could be very different. So the idea of attracting capital to C-class buildings that may never even be able to catch up is really what's the confusion right now that's causing this segmentation of value in that office space.
Yeah. Okay. So we're going to drill into that in a moment, but let's think about a different subject that's related to this because you've talked about your performance and how you can lean into create performance, but you don't lean into the inside of the building as much as a triple net lease environment as you might in an apartment complex where there's lots of operational stuff to do.
Right.
So how do you do that in your world? And I also think back to my RTC days as the government as more of a rough tenant. Now I'm going to contradict myself.
No, no, no.
I got to visit the Pentagon 2 weeks ago, and they've done a really good job inside that building. But they have
Yes,
a
they
lot of dough, and
Yep.
other agencies don't.
Yes.
So
And
kind
and
of
and
talk about
no,
both.
you're right. And one of the things, that is very true about this, administration, like Donald Trump, don't like Donald Trump. Everyone can have their feelings, but the reality is that they are bringing private sector practices into government and testing them out.
Mhm.
And one of the lessons that I believe government's going to learn over these next 5 to 10 years is that the private sector is better at managing real estate than the public sector. And it's fundamentally structural
Mhm.
because imagine if you're running the FDA and Congress decides to cut your budget and you have to think about cutting costs within your agency.
Mhm.
Are you going to cut the program of the emerging drug, or are you not going to fix your roof? You're not going to fix your roof. And the cost inside government of having someone come from inside government and come and fix the roof also is very expensive. It doesn't happen quickly. It's not what government does. Their job is actually mission, and mission is not changing light bulbs and facilities management. So the government is better positioned and will serve the American people better by being a tenant instead of an owner, because they're what they are very good at is when something breaks in the building, calling us and complaining. And guess what? When they call and complain, it's fixed in 24 to 48 hours because we have a whole system. Our private sector profession is managing those assets well, because we know fighting deferred maintenance is how you fight obsolescence, is how you
Mm.
keep your tenants happy, and how you increase your renewal rates. And we have a very efficient system for doing that. And it would be impossible for government, given that it's such a small part of what overall government does, for them to be excellent at it. And so the idea of them outsourcing the facilities management to us is a terrific idea. It happened in private sector business 20, 25 years ago. You saw these large corporations owned their building and they did sale leasebacks and fundamentally, took themselves out of that business to focus on their core operations. And I think government's going to be evolving into that space now.
I bet and hope that's the case, but let's play with that a little bit.
Sure.
And again, I'm thinking back to not just when I was at the RTC, but when I go into a government building versus when I go into a hotel. So I
Yeah.
want to think about the facility overall and the envelope of it and the systems of it versus FF&E. So we
Yep.
know what makes a hotel feel good
Yep.
is FF&E spending and keeping up with that, refreshing it every 5 years. That's number one. Number two is what the office buildings, REITs, and everybody else will talk about as Class A matters. And Class A matters because it brings the workers in. Workers want to work for Google because it's fun or whatever that
Right.
is. But they don't want to work for the government because the space is unfun, but you're fixing the bathrooms, but I don't know that you're able to get the FF&E to drive
Yeah.
worker satisfaction and worker draw. Any
Right.
comments to that
No, of
long-winded
course.
question?
If you look at our buildings, they're not the most attractive structures from the outside,
Mhm.
because they architecturally, there's maybe an architectural feature, but we invest the money on the inside. So that, and what that ends up doing is preserves more capital, for the insides to be better. Keep them clean, paint and carpet. We're always replacing paint and carpet. Another thing that we're frequently doing is replacing the refrigerators and the other convenience items that, and maybe you experience this at the RTC. If you go into a government building and you go into the cafeteria that's in these buildings, either the microwave doesn't work, the refrigerator doesn't work, there's a chair where some little knob on the bottom is broken and it rocks when you sit in it. And if you fix those little things, fixing the little dents on your car, keep it looking great. And what we do is make sure that we don't let those things fall into disrepair, because also when you're respecting your space, people like it better and they actually take better care of the building. So we paint bright colors. We talk to folks about what they want things to look at. Any time that they work in separate teams, we give the teams colors, and it creates a lot of pride, because one of the things that is true in the building, maybe you experience this at the RTC, there is a camaraderie for mission.
Mhm.
We have a lab. Well, it's a prescription fulfillment center down in Charleston, South Carolina.
Uh-huh.
You look at this building, it's just a box. You go inside, they're filling 110,000 prescriptions for veterans every day. It's like the Wonka chocolate factory with pills flying all over the place and the robotics packaging these things up. The people are thrilled with what they're doing. They know they're making veterans' lives better through pharmacology, and the efficiency of the building is something that we help them with. Most recently, they were down to sort of 95,000 to 100,000 prescriptions a day, and they have capacity to fill 110,000. And we did some exploring and realized if we put this extra 20,000 foot space on the back end so the FedEx trucks could line up faster and get loaded faster, that's where the bottleneck was. And so it was easy for us because we're in Washington to go, to the Veterans Administration and make the ask, work with the people in the field on how it would actually get implemented. And if they had tried to do that internally, it would just be one more request from Charleston, South Carolina to the VA in Washington, and it'll ultimately bubble up and they would have gotten to it. I bet you that we accelerated the time frame of that 12 to 24 months and just start doing the math. This is a 24-hour facility, 365 days a year.
Mhm.
And so, that's almost 3 million, extra prescriptions that will get filled just because of that little change. And that's
Right.
where us with a private sector attitude can stand next to government because they're not trying to ever maximize return and money. They're always trying to maximize satisfaction and mission and not getting it wrong.
Yeah, totally agree with that. And so then what does your team look like in terms of asset managers? Because
Oh, yeah.
you have a very varied portfolio. Right? When I looked it up, and we'll talk about development in a second, but I looked at a courthouse. You just described a drug fulfillment facility. How do you asset manage that great variety? And if you asset manage that great variety, but your folks know how to push harder than they might to create different goals, that then argues for the private sector
Yeah,
adding value.
I mean, and I think there's this sort of as you step away, there is a lesson in that our company, in a set of ways, we're in the real estate business. We're
Mhm.
also, whenever you're in real estate, you're also in another business. Our business is the government improvement business, right?
Mm.
That's what we're doing. Accordingly, we have people who've worked in, all the branches of government. So they've done this work. We have people who have been in the asset management business of office. We have folks, our acquisition people, our finance people, and then we have government relations folks. And these are all different cultures, and we bring them together under one roof so that we can brainstorm to solve individual problems and come up with solutions. The
Mhm.
government doesn't take every one of our solutions,
Mm.
but you just keep bringing them forward, and what you find over time is that they become increasingly receptive and they're seeing themselves in a better place to satisfy mission. But it's so important as you build a real estate infrastructure that you think about what is that other business with regard to client service motivation that you're in. And we found that to be very successful over the last decade and a half.
Okay, I want to come back to the concept of government improvement in a
Sure.
few minutes. You've also talked about that the way you manage these buildings can stop obsolescence, but when you have specialized buildings, one of the risk is not obsolescence is a risk, but the other risk is at the end of the lease term, this kind of thing isn't needed again, and it's a specialized facility. I don't know what you do with a courthouse if they
Yeah.
decide we don't have courts anymore, which maybe
Yeah.
we won't. I don't know that,
Maybe
but
you won't. You never know.
you
But
never know.
it's but you're right on to, which is, the best we can do is continue to fight obsolescence day to day. And we also know our client, the government, as they have a need, they will put money into a building. Example, at one of our FBI facilities, they needed a visitor screening center. This building was 18 years into a 20-year lease, and but they ended up putting another $2.5 million into a very nice visitor center because they needed it. Now, that made that building better. They spent the money to do it. They made our asset more valuable, and it also made it easier to renew. And I'm sure, hopefully, somebody in government also looked at that expenditure and said, this is a building that we like. And the tenants are happy before they sunk the money in. But
Mhm.
the reality is, that they're helping us fight that obsolescence. your point about residual value is a very important one. And we know that these buildings can last 40 or 50 years. There
Mhm.
is a point where that residual value will be small. We have an FBI facility in San Antonio, Texas. It's got anti-ballistic glass, great setbacks.
Mhm.
The University of Texas, could certainly turn it into, their administrative building. I'm not sure they need the bulletproof glass. So to your point, they're not going to pay full price for that. But there is some value, that would remain. And the idea, if we can keep a building relevant and on mission, getting a lease renewal from 20 years to 30 years, 30 years to 40 years
Mhm.
is really what we'd anticipate. And that's what we've seen with our renewal rates being 97,
Uh-huh.
98%,
I th
on average.
And if they're putting in the visitor center, you're increasing the value, but only for them. So they're making it very sticky because 'cause they're really
They are.
recommitting to a lease
Yep.
renewal.
The more
But for
capital
anybody
there,
else, you're in trouble.
yeah, because the great part about our segment is we know that capital that's going in is meeting a need of our client.
Mhm.
That's the key.
Okay, so I wanna think about with the level of change that Trump and Doge is bringing to government, and you're in
Yeah.
the making government better business, I think that's a quote.
Yep.
Then what there is more unpredictability about this. There's a little bit of unpredictability about the full faith and credit of the federal government even, because 'cause they're willing to break some rules here.
Yeah.
So if you look out 10 years, if there's a Democratic administration, they're gonna keep some of those changes. Not
And
unpredictability, but they're gonna keep changes too, because this is breaking through to a way the government needs to become.
yes,
Uh,
that's right.
okay,
And
so
this it's
let's
why
talk about all that.
we really do have a single poll system in the Americans, right or left, essentially believe in so many of the same core issues. Obviously, the politicians fight over things in order to develop voter support. But what most Americans don't know is that over 80% of all the bills go through Congress on a bipartisan basis. And the political parties are deciding what they're going to fight about, almost agreeing on what they're going to fight about, so that they can, fundamentally, when you think about voters, it comes down to a very simple differentiation of justice and freedom. Right leaning people, if they wanted to live in a world that's 100% free with a little less justice, that's what they would choose. People who are left leaning,
Mhm,
would love a world that's 100% just with a little less freedom. That would be their preference. That very simple distinction, drives voters left and right. And what Americans should all understand is that the least expensive way to energize your base is to make them angry. And, you see that both on the right and the left, with regard to, create this sort of consternation. But
mhm,
one of the things I learned from Mitt Romney most is that he was a fixer in government. One of his favorite sports, I think, was PowerPoint. And when I saw him in Massachusetts create one of the best healthcare systems, fix the transportation, he was always coming up with solutions, and that
mhm,
inspired me, to in this business, to be in a place where we can help government, Republican or Democrat, and we really do benefit from these strong feelings and ideas coming into government. Some of what Donald Trump and that administration is going to do is going to have a very lasting effect because it works for everybody. And the next administration will come in. They'll make some changes. Some of those will be correct changes. Some of them will be wrong. But that check and balance of our party structure has been something that's as we celebrate our 250th year as Americans, it's worked. And when you think about full faith and credit of the U.S. government, we do have the most robust growing economy on the face of the planet, and that's where we are today. Forget about China, forget about everywhere else, and there are only 5 countries in the world that can actually generate enough energy, feed their people, do the things they need to do in order to support their nation. And we're one of the few. And so when you take all of that and step way back, forget about the headlines, don't read the papers every day. We feel great about what's ultimately backing the credit of our tenant.
so let's assume the credit of the federal government will persist. So I got that. Let's go there.
Yep.
But think about the different ways that government might use space. And I am thinking about office buildings because that's easier for me. I'm thinking
Yep.
about AI. I'm thinking about government using AI because they'll need less clerical help
Yep.
in a big way.
Yes.
Now, maybe some of that clerical help stuff, not bureaucrat help stuff, is in your facilities. So if I'm underwriting the risk and I'm looking forward 10 years to what an idealized government might look like as a partner for you, what does that look like and feel like
Yeah.
looking into the future?
Whatever is true, whatever you and I can imagine will take 2 to 3 times longer in government to be achieved than it is in the private sector. The private
Hmm.
sector will lead the way by a good by a solid generation, couple decades,
Hmm.
relative to government. That also said, we work very closely, with the government, and we think about how do we support that workforce. You can't catch criminals with AI, not yet. That we're a long way from that. You've got to actually get the evidence of the drugs from the crime scene and store it somewhere. It's a people business, and it deals with real humans every day.
Hmm.
And so, in many ways, some of the analysts and folks from the outside have called us the AI immune, real estate investment, because what we're investing in, and when we talk about being close to mission, our buildings are active, and they're active, actually doing work. If you look at our FBI building in Pittsburgh, if I were to take you on the tour of that building today, hopefully you'd see that it's 60% empty. The conference rooms are empty. The many of the facilities are not being used. But what I'll tell you is when there was an assassination attempt on President-elect Trump, I guess, or ex-president, whatever President Trump would be called, that building was 110% capacity, and it needed to be. And so all of the conference rooms were working. All of the facilities were working. All the special features were working, so that the minute that place needed to light up and do its work, it was ready to go, and serve the mission. And so these facilities, they're not going to reduce the footprint by 10% to save a little bit of money. The whole rent roll for the US government today is a little over $5 billion a year.
Hmm.
$5 billion is a lot of money, but it's not a lot of money divided by, the trillions of dollars of the US budget. And so
Hmm.
very important for them to just have facilities that meet mission, rather than saving a nickel or a dime because they have, fewer square feet.
I'm thinking of Thanksgiving. And do you build your kitchen for Thanksgiving or do you build your kitchen for the day after the president-elect gets shot? Right? What does that mean in terms of daily use, average use, optimal use?
I think it matters if Matt, if you have a house where your whole family shows up on Thanksgiving and you love Thanksgiving to be important to your family, you're going to build your house for Thanksgiving, and it's what you're going to look forward to. And we need those facilities around the country, in the field, to
Absolutely.
meet mission. And
Well, let's
that's
play with that for a minute. So, do
sure.
you have FEMA in your?
We do,
Yeah.
yeah, we have some FEMA buildings, out in Tracy, California. We have a facility that if there is an earthquake in San Francisco, get this, there's 130 tractor trailers that are loaded right now with food, water, and medical supplies that can roll out of that
Yep.
facility within 30 minutes. And those trucks get repacked, almost every 90 days for freshness and to make sure that they're ready. If you really want to have a bad day, Matt, go ask the people who run these facilities what their worst day is,
Mm.
and they'll quickly direct you. Well, I always love to ask the question, and I'll scare you now for 5 seconds, which is there's something called the Cascadian Fault that goes from Northern California into British Columbia. It moves about every 300 and something years. In the 1700s, it created a tsunami that would bring water almost 10 miles into our shoreline on the West Coast. We
Hmm.
didn't have anybody populating that portion, the Pacific Northwest at the time, so we didn't feel it. But if you go back and look at the history books in Japan, the wave made it there. It's
Hmm.
the type of two tectonic plates that come together, and they're not exactly sure what they'd be doing the next day. If you go to the Oregon's website, the state of Oregon, they've
Hmm.
got a disclaimer. It's right there for you to read. And so, but that preparedness is what some people are thinking about each and every day, and I point to it because that's what government's job is, and that's what they're satisfying, and that's what our buildings help them do.
Okay, let's play with that one for a minute. So, couple
Sure.
things for our listeners. There's an amazing article in the Atlantic 7 years ago on that Cascadian fault And it just scared the heck out of me. And my daughter then moved to Seattle. And I sent it to her before she moved there because I was terrified when I read about that. Number one.
Yes.
Number two is we had former head of FEMA on the podcast about a year ago. So we talked about a lot of this and a lot of the things that FEMA has on standby. Number three, we had a fire episode last year where we talked about this. It was part of the FEMA thing. Number four, I live in fire country when I'm on the West Coast. So fire came to my back door. I care about this.
Yep.
We have another episode on fire. But FEMA is being largely defunded. So the question is, now we're going to come back to you and your stock discount, is the uncertainties in government when you say so confidently that FEMA is here, got to be here, makes sense, and there's these wonderful facilities, but now we have uncertainty around, well, maybe these things don't matter. We know it's not true,
I know it's
but
not true.
maybe that is going to become reality, and that's going to hurt you and your stock price.
No,
So
I think you're speaking to two things. One, you're speaking to investor perception, right?
uh-huh,
And you're exactly right. We've had, as when I can say, we've posted 8 quarters of very strong growth, and we're continuing to.
right.
That is true. We have been beaten by headlines during this time. When people heard about Doge, they imagined, all of our leases would be canceled. Government's going to be completely reordered. Not one of our leases was canceled. Why? Because we're focused on mission critical facilities that are doing real work. FEMA is not going to go away. Maybe we'll call it something else. Maybe we'll put some pressure on the agency to be more efficient.
Mhm,
Maybe we will put pressure on them to be more prepared. And that type of pressure is healthy and good. But I can tell you there's no way the American people would tolerate us not being prepared for emergencies. And so we talk about government cutting and finding waste. Ronald Reagan is probably most known, for shrinking government. He never shrank government. It only grew about 2%, during his administration, which was a really big deal. If you looked back through the 70s and the 60s,
yep.
and how fast government was growing. And so for these core missions, they grow with population. And maybe, important way to, stepping back, thinking about real estate investing,
Mhm,
there's supply and demand investing in real estate. Think of that as pure office. You know,
mhm,
is there demand for these spaces? How much of the A-class spaces exist? And that will drive price. For us, there's also a demographic way to think about, real estate investing. And, what we do is demographically driven.
mhm,
Um, as long as we have wars, we're going to continue to have a growing population of veterans. As long as we're having babies, sadly, some percent of them are going to be criminals, and the FBI is going to always have its client list growing. For if the DEA is going to exist, there will be drugs, there'll be drug addiction, there'll be drug crimes, and Americans don't tolerate that. And so,
mhm.
so as the population grows, these agencies are going to grow, and that's what we think about as demographic investing in real estate. Senior centers, and we're not in that business. That's also another demographic. Outlet where senior centers appreciation as the population grows, the demand is going to grow, and the supply needs to meet the demand if prices are going to stay even stable. So when we think about the demographic push behind what we're doing, I think that's a very good way to be looking at real estate more broadly as you think about stable strategies.
Well, I like the concept of stability. I like the concept of the demographics being the reality. I like the concepts of there are components of the government that are absolutely long-term essential, and I agree with you that they just can't go away, and they,
They
fingers
won't.
crossed,
They
won't.
won't. Yeah, I don't even. I have no idea how they could. To be candid,
Yeah,
seeing how they work, and I mean, you had the experience with RTC, which was a pop up organization, and
that's
it
right.
had a mission. But if you see what the FBI does every day, it's you can't cut it, change it, reorganize it. It is a large system that has a history of
Mhm,
decades of being successful in a pretty darn efficient way. We
yeah,
haven't had an attack on our domestic shores since 9/11,
mhm,
and that's to their credit. And I get the opportunity to tour these facilities and see what folks are doing every day, from cyber crime to all the other activities that the FBI is engaged in. And there's no American who'd call that fraud and waste.
I
So
agree. One of the interesting things about the RTC is a lot of money and a lot of net worth transferred through that organization. They reworked and reordered the economy in a lot of ways. The REITs came out of the RTC in some ways. Private equity in real estate came out of the RTC in some ways. Securitization came out of the RTC, and there must have been one or two. I don't think anyone went to jail around the RTC who worked there.
No.
So there was no stink around that organization and all that it accomplished.
Yeah, I mean, we could have a big conversation around, capitalist solutions and how they're
Yeah.
tolerated in the US and how they've actually contributed to innovation, but that's probably for a whole other podcast.
Okay, we'll do that next time. What have we missed in the conversation that you want to say about your company and about your sector?
Well, no, no, no. I mean, I think the sector is very interesting. I think, as investors are looking at real estate more broadly, or you're thinking about a career in real estate, think about what those big drivers are, and over what horizon. I think it's important again to see the difference between demographic real estate, and what's basically driven by supply and demand. It's an important differentiator for
Mhm.
us. We are in the government improvement business, and the reality is, government can be improved. It can be improved all the time. So, we're going to have an enduring client. The mission of what we're involved in is deep, critical, and really unwavering in what we do. And it's a terrific opportunity, to not only buy some real estate at 70 cents on the dollar, but as we migrate from being thought of as tertiary office ultimately to net lease over time, given the characteristics of the business, you can see some nice multiple appreciation too. So I think for buy a little stock, watch the company. You'll learn a lot about real estate, and I think it's a nice contrast, to everything else that's going on in the real estate markets today.
Yeah. And with uncertainty and politicalization of so many things, one of the conversations I had on a podcast last year with Jeff DeBoer, or maybe it was Steve Wexler, so from NAREIT, and he said, this is a bipartisan issue. And I said, it should be a nonpartisan issue. And I think government improvement in general is a nonpartisan issue. We all agree to that. Now, how we do it is an interesting question, but we all agree that anything should be improved, but
Yeah.
particularly government is
No,
just fine.
nobody's against it. And it's, in a set of ways, there's also a big, broad conversation to have is that, in our country, a lot of people they would love progress, but they hate change. Right. So how do those things, work themselves through? I think you also, just see among people, people can get very cynical. Maybe that's the media. Who knows what it is.
Mhm.
Uh, but go drive in a car from like 1985. And now go drive in a car that's probably even the same price today.
Yep.
Go find your $25,000 or $30,000 car and drive around in it. You'll be amazed at all the safety features you have, the convenience, the Bluetooth, the accuracy of the speedometer. You're not going to run out of. It all works. The country's moving forward. And every generation has been better than the last. And it's so sad when I see these surveys of young people who basically say, "Oh, like my life may not be better than my parents. It's going to be so much better." So but for some reason in our day to day lives, we worry that it isn't. But government's going to continue to grow. Hopefully, it grows a little bit less and it grows more efficiently. But that to and fro is what's happening, and we should all just like step back and breathe a little bit about the whole thing. And I think we're going to be in good shape.
I agree on that optimism. So, last question on leading voices is always your advice to a young person entering into the real estate business.
Yeah, no, I mean, I think it's really understand the mathematics of it. It's important. Understand, supply and demand dynamics, understand risk mitigation, that's fighting obsolescence and diversification. And it's understanding who your customer is over the long term, because there's no quick money to be made in real estate. It's all about, the cash
Mm,
flows in the future. And if you understand those dynamics clearly, ultimately it may take a little time for the value of those cash flows to surface, but it will. And that's in being a student of the profession in each of those areas would serve you very, very well.
absolutely. It's interesting. You started with mathematics, ended with customer. And I think
Yeah.
those are the two sides of the real estate business that need to be balanced. And the best leaders both understand the math
Yeah.
deeply and they understand what that customer needs. So
So often I speak to people and they'll say there's finders, grinders, and minders. And so, you've got your explorers finding the real estate. There's the people who are managing and
yep,
harvesting value. And then the minders are the people who are doing the money and making sure the math works. And knowing a little bit about each of those would serve every real estate professional very well.
totally true. Well, thank you very much, Darrell. It was great to meet you and have you on the show, and good luck with all of this business, and please make government better. It's a good thing.
Yeah, we're going to try to do our very best. Keep those cherry blossoms rolling.
I hope that you enjoyed today's episode. Please remember, if you're enjoying Leading Voices, to share an episode with a friend or get them to subscribe. If they're podcast wary and not sure how to find and subscribe on their phone, go ahead and take their phone in your hand and subscribe for them. And add another few of your favorite podcasts to their list to get them started. They'll thank you for it. You can also find episodes of the show on our website, which you can find at zrgpartners.com/leadingvoices. And if you have comments or discussion about this episode or Leading Voices in general, or if you're seeking help in real estate human capital solutions, recruiting or consulting especially, please contact me at mslepin@zrgpartners.com. Thanks for being a listener to Leading Voices.